For the past 10 years, there's been a jump in the number of lending institutions that specialize in automotive financing in Denver. Area dealerships, banks, and credit unions have established separate divisions specifically to handle car loans, while mortgage lending institutions have branched out into the area auto financing as well. In an area that spans over 180 square miles and a population of 500,000 people, the Denver market for car loans has expanded significantly, and the marketers of these loans want you to buy. Although you may not think of a car loan as a product, that's precisely what it is, and lenders are selling them in a highly competitive environment, which includes selling auto financing to people with poor credit, bad credit, or no credit. Does this mean you get the same great deal on a car loan with bad credit as someone who has an AAA credit rating? Absolutely not. What it does mean is that someone with a poor credit rating has a spot in the Denver marketplace, and getting financing on a new or newer car is a definite possibility. For people with a low credit score, there are 3 general categories for auto financing: non-prime, subprime, and deep subprime. To know what these terms mean, you need to know what a prime lending rate is. A prime lending rate, also referred to as a base or a reference lending rate, is an interest rate banks reserve for their most creditworthy customers and is tied to the Federal Reserve's federal fund rate. Currently, the prime lending rate stands at 3.25%, which makes financing anything in the U.S. a fairly economical thing to do, if you have good credit. But even with bad credit, the interest rates you'll have to pay won't be the worst in the country. Qualifying for auto financing with a poor credit score is not that difficult these days. Right now, about 10% of Americans have perfect credit, while over 50% have credit scores that are below average. If your credit score is below 600, you're in the subprime lending rate category and will be looking at some pretty high interest rates on a car loan, around 6.75% or more. With a score of 500 or lower, you're in the deep subprime lending category and could face interest rates as high as 13%. This isn't pretty, and it means that the average car loan term will be 60 months to keep payments within reach. Now, if you're the sort of person who likes to hang onto a car for a long time, this is a manageable loan term, and while such a loan will add hundreds of dollars to the cost of your car over time, it does make financing an economical, viable option. Given how big an area Denver covers, public transit is not an option for most working people, and a car becomes a necessary expense, and getting a car loan with your bad credit may be the only option to get to and from work each day. But it's up to you to improve your credit standing by paying down as many outstanding debts as possible, close credit accounts that you're not using, and don't open any new credit accounts. Employ a little discipline in your financial life and live within a budget. It's easy to cut corners on spending if you think about it. Get a handle on how many times a week you purchase fast food or overpriced cups of coffee. With a little effort, you can raise your credit score enough in a single quarter to qualify for a better lending rate, which could mean a savings of hundreds of dollars. Federal Auto Loan. Good credit, bad credit, no credit, all good.